What's up everyone, it's Scotty with MoneyVest. So markets here rolling over a little bit here on the day with the NASDAQ and the S&P 500 both down and the Dow Jones here also dropping about 0.5%. So in this video, I'm going to break down, of course, everything to look forward to because the next week we've got the FOMC meeting. So very important Fed meeting along with the summary of economic projections are also going to be released from the Federal Reserve and of course from Chairman Jerome Powell. We're going to hear the speech of Jerome Powell next week. So lots to unpack in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. If you're just joining us for the first time, and again, links to our Discord and Patreon is going to be down below. We'd love to have you on board. You get access to our weekly newsletters, as well as our trade ideas and trade alerts and options alerts, all of our Discord channels, members-only private videos, and our private beta launch for the MoneyVest.com platform that's going to be happening very soon. So again, link's going to be down below. I'd love to have you on board. So this right here is going to be the headline. So how the Federal Reserve could throw the stocks for a loop. So again, Jerome Powell's speech next week, very, very important. So nothing has been able to kill this bull market. Even this past week with featured hotter than expected inflation numbers, consumer price index. We did not see that the enthusiasm getting dampened at all. And this right here, I believe, is for the week here. So market snapshot, again, pushing higher very, very nicely. I think on the week, we are still green. Might even be flat here. But while stocks didn't freak out about inflation, other financial metrics certainly reacted. And the federal funds market reflects just about a 58% chance that the Federal Reserve will cut interest rates at least once by July. And at the end of December, there was a 75% chance of at least one cut by March. So we have obviously pushed back on those rate cut expectations as expected. And what's more, the two-year Treasury, a parameter for expectations about the Federal Reserve's interest rate, is also higher, up 30 basis points more for the year at 4.7%. The last time it was at this level in early December, the S&P 500 was 11% lower. So we've definitely seen a little bit of that momentum higher for the bond market, for Treasury yields. And that is, again, a very, very important indicator for equity valuations, because the higher the risk-free rate, which is on the back of the Treasury yield, goes up, the lower, I shouldn't say lower, but I guess there is a higher probability for a pullback and a correction, because valuations start to become more expensive the higher the yield is. And the stock market is ignoring these troublesome signals, and the Fed may have to provide a wake-up call at its monetary policy, which ends this coming Wednesday. And almost no one expects the Fed to actually do anything. There's a 99% chance that it leaves the rates where they are, does not increase, does not cut either. And the Fed's policy meeting next week could be a highly consequential one, is what Thierry Wisman, Global Foreign Exchange, basically says. Formally extend the wait-and-see period moving forward. If the Fed officially dashes hopes of rate cuts this year, the market would be well unthrilled. We expect price action to be quite volatile, as we believe that investors are placing too much emphasis on the timing and the magnitude of potential rate cuts. And this was from Brian Belsky, Chief Investment Strategist at BMO Capitals, and we do not view the current pace of the U.S. stock market gains as sustainable. I think that's a very, very reasonable expectation from BMO Capital Markets. And really, if you take a look at what is on deck for next week, we've got, of course, the SEP, Summary of Economic Projections, which is going to highlight the interest rate expectations, inflation expectations, GDP, and unemployment. So those are the four key areas that the Federal Reserve is going to forecast for. But of all the four things or the items on the agenda, the only thing that really matters is interest rates. And interest rates, because the Federal Reserve has full control over interest rates. Everything else, inflation, unemployment, and economic growth, it's an estimate. It's a forecast, which the Federal Reserve may be right, may be wrong. Nobody knows, right? It's kind of like predicting the future. But interest rates is really what the Federal Reserve is going to do, and they have 100% control over where interest rates are going. Are they going to raise? Are they going to cut? What are their plans? And that is going to be very, very important. Now, the timing and the magnitude of those rate cuts has been getting revised month by month, because even going into 2024, so my videos from last year, towards the end of last year, so in fourth quarter, I specifically mentioned that I think expectations for rate cuts are very high in 2024. I wouldn't be surprised if the Federal Reserve starts to pull back on those expectations, because the market right now is pricing in too much optimism around rate cuts. But if inflation continues to stay elevated or a little bit more stagnating on the sideways, meaning that it is higher, there's a situation with stagflation, there's possibility that the Federal Reserve does not cut interest rates as early or as quickly as what the market's pricing in. And one of the things that you have to remember, which is very, very important, is that for the Federal Reserve and for Chairman Jerome Powell, the risk of cutting too early significantly outweighs the risk of cutting too late. I've said this before and I'll say it again. The risk of cutting too early, the reason why that far outweighs the risk of cutting too late is because risk of cutting too early is the risk of reaccelerating inflation back higher. It's basically kind of, putting the genie back in the bottle and then opening that bottle again, right? And then you're basically letting it out, and the acceleration risk on the inflation number is very high if you cut too early. If you cut too late, that's okay because a recession can be fought. Unemployment can be fixed by lowering interest rates very, very quickly. But that cannot happen if you cut too early and inflation spirals out of control again, and then you have to raise rates again. So they don't want to get into a situation where they do a repeat to the 1970s, 1980s, where the great inflation, and it kind of takes us, over 7, 8, 10 years to get inflation back down. So they want to get it right this first time. So like I said, the risk of cutting too early is more than risk of cutting too late. Or said another way, the risk of cutting too late is better for the economy and for the markets than the risk of cutting too early. So that's really where we are. And even if we don't get any rate cuts in 2024, I think the market is still going to be, I guess, okay. There might be some repricing risk, as we've already talked about, but we do keep pushing our expectations higher, farther and farther with respect to those rate cuts. So only time will tell, of course, how many we get and when we get those rate cuts. But nonetheless, we did have Microsoft, Adobe, so a lot of technology stocks here selling off. Google, Meta was down, Amazon was down. The entire software application stocks were down. We got Broadcom pulling back. AMD was down a little bit over. Actually, AMD was up 2%. NVDA was slightly flat. This right here, again, the entire breakdown, most sectors were red with a few sectors basically flat to slightly higher. The last week was a little bit of a split with energy pushing higher. So energy did see some inflows because oil prices, actually crude oil, was up on the day today, right? So if you come over to crude oil, we did see the last couple days actually very, very strong momentum. We're almost back up to $81 per barrel. So if you come over to my energy watch list, it was basically green with Valero. We got Marathon Petroleum, we've got, crude oil, Shell, Occidental, BP, all pushing higher. But on the week, of course, these companies did move higher. Chevron was up a little bit over 3.7, Exxon pushing up over 2.6, Devon Energy was up a little bit over 3%, BP was up over 2.9, almost 3%, with Marathon Petroleum also pushing up over 7, almost 8%, with Occidental pushing up also over 3%, and Shell was up over 2.3%. Now, if you compare that to the S&P 500, which was down 13 basis points, and the NASDAQ also lower, down about 70 basis points for the week, that definitely does show us a little bit of that outperformance that we saw and witnessed for the energy sector. Comm services, I think Google had a pretty decent week. Google was actually green, I believe, this week here, pushing up over 4.3%, and Meta might have been flat here on the week, slightly down about 4%. So actually, Google, lots of liquidity flooding back in. I did a video last weekend talking about how that is a good potential trade idea. So again, if you want to get access to all of our newsletters and private members only videos and alerts as well, link's going to be down below. There is a 16% annual discount available until the end of this month, with a few more spots available and left for this month here. Basic materials and consumer defenses were green, other sectors pulling back, but in the last 1 month, of course, everything is still green, with comm services struggling a little bit. Orange juice for the win, cocoa prices for the win, soybean pushing higher, with oats and natural gas pulling back. Bitcoin just under 68,000 and Ether just over 3,600. And this right here is the market on the day. So almost 1% decline on the NASDAQ, just over 16K, and S&P just over 5,100. So I did highlight some of the very, very important levels to keep in mind for the market. So NASDAQ here, we've already talked about how this is basically the range within which we've been trading. So if you come over to the daily chart, you'll notice that we have just really been consolidating sideways, and we're starting to kind of break down from this higher low, and a very important support sits at around 15,800, 15,900. So very, very important level to keep in mind. Previous support, previous support, previous support. That is going to be that level to keep in mind, all the way down to that green rectangle and another support between 15.1 and 15.4 for the NASDAQ. So that right there, after seeing a little bit of a breakdown below this, is going to be that level to keep in mind in case we see that momentum to the downside for the markets. S&P 500, very important level to keep in mind at around this 5,050, 5,060 level. We're already starting to see a little bit of a pullback, you know, day after day, week after week. We're seeing some consolidation and some exhaustion with respect to that momentum upside, and support level is going to stay put at 5,050 here. And if we do end up, let's say, breaking down, the next support, unfortunately, is going to stay put down to 4,800. There might be some support level if you come over to the 30-minute time frame. I mean, you could argue that, you know, there's maybe some demand sitting right here, 4,900 as well, because, you know, a couple times we've gone validated here. So you can see that back in February 5th, February 13th, we got validated at those levels before pushing higher further. But that right there is going to be that support next at 4,900 in case we get a breakdown further. Talking about Apple, and Apple here was also green, I believe, for the week. I could be wrong, but let's take a quick look. So on the week, it was up over 1%, but nonetheless, a little bit of a doji candle. So lots of indecision for Apple here. We've talked about, you know, these trade ideas for Apple that make a lot of sense. So targets and resistance is going to stay put at close to $199, close to $200. But at zone 2 is when Apple is actually going to be a lot more appealing, a lot more attractive from a risk reward standpoint, because it'd be down about 20+% from those levels. So that right there would be an ideal price point to start looking into Apple for the long term. Talking about Amazon, and Amazon here also struggling a little bit. Doji candle on the week down about 0.5%. Resistance is going to stay put at $179, close to $180, and support level is going to stay put down to $159 to as low as $143 for Amazon. Overbought RSI, overextended MACD. So would not be surprising to me if you do see that pullback and that support level at 160 get hit once again. Talking about Tesla, and Tesla here continues its sell-off, down about 6.7% on the week, although ended up green by God's grace here. So support level is going to stay put down to 150s. As I've already mentioned, I think low 150s is possible for Tesla, and in worst case scenarios, low 100s is also possible for Tesla. But my fair value obviously sits somewhere around 150s, 140s, 130s, depending on the calculation, depending on the time horizon, the growth rate, the P multiples, a lot of factors at play. But anywhere between, I would say, 120 to 150s is where my intrinsic value would end up for Tesla, kind of basing it purely off of an electric vehicle business. But again, expecting at least some growth in the years to come with some reasonable 10 to 12% margins for Tesla on a net bottom line basis. But nonetheless, 150 is going to be that support level to keep in mind. NVIDIA, on the other hand, continues to rally harder and harder. Very, very overbought on the RSI and MACD here on the weekly time frame. Just got to be super careful. Continues to trade a little bit in this descending triangle where it is making some lower highs. That's pretty obvious. But at the same time, it's validating that support in around 845, 850 at the moment. So it's still very much in the context of this uptrend. Just got to be super careful. The moment it breaks down below 842 is the moment where there could be some potential trouble, because this is actually the second time we're seeing the MACD cross below the signal line, and every single time it actually got bought up here fairly quickly. At least the last couple times you can see the MACD crossing below the signal line. This actually was earnings, so this one right here was actual earnings, and earnings came out so strong that we got a huge recovery back up for NVIDIA. But this right here was another time when the MACD crossed below that signal line, and we did see a little bit of pullback, a very, very small pullback, before finally getting that breakout to the upside. So not saying that this is actually the beginning of a sell-off, but just got to be super careful because there's a descending triangle, RSI is pointing downwards, and MACD is also crossing below that signal line. So it's possible that semiconductor stocks do go through a little bit of a pullback correction, or some stabilization period where they don't keep going up forever, which we already knew wasn't going to happen. AMD here up over 2%. Support level is going to stay put down to 164, down to $151 per share for AMD. Still a very strong long-term contender, in my opinion, for solid gains. But we just got to wait and see where the right pricing ends up being for AMD for a lot of semis. PayPal had a very strong week. It was actually up 6.5%, more than energy, more than S&P, more than NASDAQ, so outperforming the markets here. So resistance is going to stay put at $65, $66. So that right there is going to be that next resistance and target level to watch. $57 is going to be that support. Again, we're still kind of battling through this downtrending channel of lower highs and lower lows. So it's got to be careful and see whether PayPal can break out from this resistance finally and get up to $76, $77 or as much as $88, $89 for PayPal. So those right there are going to be some levels to watch. It really does feel it's consolidating sideways a little bit now. Visa here, resistance is going to stay put at 285, and right now we're mostly consolidating sideways. Support level is going to stay put at 249, close to $250 for Visa. Now moving over to Meta platforms. Meta here this week down about 4.3%. And it's also starting to show some signs of weakness and a potential breakdown with the RSI and the MACD also coming down. There's a lot of negative divergence and of course a massive gap to potentially fill for Meta as well. So near-term support, if you come over to the 30-minute time frame, what you will notice is that there is a lot of support for Meta in and around these prices. Because previously we've gone rejected at these levels and supported at around 475. And then below that, we're going to be keeping a close eye at around here at 450s for Meta. Again, couple times validation, and support here. So those right there are going to be a few levels to keep in mind for Meta platforms moving forward here. Next one on the list is going to be Netflix. And Netflix here also kind of getting rejected at that resistance 624, 625, a level that we talked about. Very similar to Meta here. Gap on the downside, negative divergence on the RSI and the MACD, getting rejected at a resistance. Support level at 473 down to as low as $314, $315 for Netflix. Google, again, had a very nice, strong recovery this week. Resistance and target's going to stay put at 150s, but it is making a little bit of that lower highs. So this was the all-time high. Got a lower high, we got a lower high, and we got a potentially lower high here. We got a lower low, we got a lower low. We got a lower low, and then we also got another lower low. So it continues to kind of trade in this downtrend here, which you could argue is a little bit of weakness for Google. But we really need to break out above this resistance, I'd say, next week if we could, 146. And then there's possibility for us to, of course, retrace back up to 150 for Google at the moment. RSI and MACD are in favor. We're seeing some good momentum on the RSI, MACD also crossing over that signal line. But of course, next week's FOMC meeting is really what's going to dictate whether Google pushes up to new all-time highs or not. And finally, we got Microsoft, and Microsoft consolidating sideways and of course coming back down within range, down about 2%. Support level very strong, sitting at roughly around low 400s. So this is the level to keep in mind for Microsoft. Of course, we get a breakdown below this. We break down from this higher low, and the next target and support is going to be in the 360s. Without any time wasted, it will come down to those levels, in my opinion, eventually. Enphase continues its slide lower, down about 2.5%, so breaking down almost from this support. And as unfortunate as it is, the next support is going to be at $90 to $93, kind of in line with the previous level that we have already validated and tested for Enphase. But this right here, of course, has been a pretty reasonable sell-off. I mean, this week, Enphase is down a little bit over 17%, so definitely selling off quite aggressively. And like I said, my calls could not have been in the money at a better time. I got my calls in the money on Friday by about 20-30 cents. My shares got called away at $130 plus the premium that I received. And next week, Enphase drops over 17%. So if you want to get access to all the trade alerts and trade ideas, like I said, most of our options trades are going to be focused on selling options, and the success rate is incredibly high. I kid you not, most options that I sell turn into a profitable position. So selling calls, selling puts is one of the best ways to actually generate some income. And at the same time, kind of build that confidence over time that, okay, you actually can indeed generate some income and cash flow by selling options. So again, links can be down below if you want to join. And finally, for Costco, 675 to as low as 644, some support levels to keep in mind for this company. So hope you all enjoyed this video and a complete update on the markets. Again, lots to unpack. And next week here, we've got the very important FOMC meeting. So I will be live, of course, to cover the entire event. And as always, make sure that you drop a like, subscribe to the channel. Links down in the description below for all of our features and benefits and all of our Discords and Patreons. And again, feel free to ask any questions if you have anything. As always, happy investing, and I'll see you all in the next video. Take care.